Hello, everybody. It feels weird saying hello because you're going to see me say hello in real life. But Paul is joining me today ahead of the 27th of December, which is what we're now on, technically. This feels very meta.
Yes.
Because he's unable to join us on the day. But I really wanted you to hear from him. His predictions are absolutely phenomenal. We're going to talk about some of the key ones, which I think are really going to help you guys understand how to position yourselves in 2026 and beyond. So when we're talking about launching your year, having a real wealth of understanding about what's really going on in the economic systems of the country we live in, but also the global economic systems and where those patterns and trends are is super, super important. So I often describe Paul as the most intelligent man I've ever met, which is true. So I wanted you to benefit from his wisdom and his knowledge. So Paul, just tell us a little bit about your predictions over the past few years. You've got quite a high accuracy rate.
Yes. So, okay, number one thing, when prediction is a direction of travel. So, for instance, if I was talking about housing, inflation directly impacts the mortgage rate. I think most people would follow that.
Yeah.
Inflation goes up, mortgage rates tend to get increased, or interest rates tend to get increased to try and depress spending. So last year, I said that the government was wrong. So this is 2025, the government projecting that inflation would drop to their target of 2%, and it didn't. And I said that it would be above 3, and I put a bracket of 3.5 to 4.5, and it ended up coming at 3.5. So I'm not going to predict an actual 3.487, but it's just directionally the government said 2, and I'm like, nah, 3.5 plus. So there are certain trends that I don't know whether it's me that's weird or something. I don't think it's difficult to see the likely consequences of something that governments do. So, for example, what are the big things we've seen in the last 12 months and will continue to see in the future? Well, we've got a certain Mr. Trump in the White House.
Yeah.
Has he made himself the Pope yet? Or
not just yet. No, I think he's working on it.
I think he is. But one of the things we can be absolutely certain about, regardless of our personal views with regard to the gentleman in question, is that he's decided to introduce tariffs. Now that has got to be inflationary. So it is inflationary, and there are a series of consequences that flow from that. But the biggest one, my number one prediction this year, is because I am one of them. I am the last of the baby boomers. So I don't know how much you know about the baby boomers, but after World War II, pretty much everyone said, phew, that was lucky, we're not dead. Good, the war's over.
Yeah.
And they started having lots of babies. And that is a thing that continued from 1946 all the way up to the year I was born in 1964. Why is that relevant? Where's he going with this? Well, I'm 61 years old, and I'm the youngest of the baby boomers.
Mm-hmm.
The baby boomers are the wealthiest generation that the UK, the USA, Europe has ever seen. Why is that relevant? Well, we're all in our 60s, 70s, even 80s, and therefore the houses, businesses, money, stocks and shares is beginning to get passed down the generations. So if I picked just the UK, for instance, the wealth transfer from the baby boomers is 5.5 trillion, which is a lot of money, even in Monaco.
It's a hard amount of money to even fathom.
Yeah, it is. The way I've simplified it in my mind is it's approximately twice the GDP of the UK. So everything, if anyone doesn't know what GDP is, it's all the stuff, all the services, all the cost of coffees, all the banks, everything that the UK produces in a whole year. Well, the baby boomers have got 2 years worth of that.
Wow.
Stored up, saved in their pockets, bank accounts, houses, whatever, and they're passing it down the generations. So the questions I'm asking really, given that that's a fact, it's happening, are you involved in that? So are you a baby boomer like me that's thinking about now, well, how do I pass this wealth on? Because I don't particularly want to give it to Rachel from accounts.
No.
So I don't know if you want to do that. I don't want to do that. And or are you one of the people that's going to inherit it? Because the number one financial car crash that I see is when somebody has had a modest, normal amount of money, and suddenly they've got tons.
Yeah.
So think lottery winner. Think Premier League football player.
Yeah.
So looking at lottery winners in particular, 90% of them are bankrupt within a year.
Mm-hmm.
So if you are a child or a grandchild, or if you're a parent or a grandparent that's pushing money down the generations. Have you thought that through?
Mm.
And I asked a series of questions, which I refer to in the full predictions document. Startling fact, for example, 75% of people in the UK don't have a will.
No.
So imagine you've got two houses, you've got a house you live in and maybe a seaside house in Kent or something, if you're a typical person in the southeast, or not typical, but many people would be there, and you've got £2 million worth of houses. Well, the first £500,000 will be inheritance tax free, and then you've got £1.5 million, and the government will come and take 600,000 off of your kids. Do you want that? Most people haven't thought about that. Most people haven't thought about one of my relatives, for instance, my great aunt Peggy. She got put in a nursing home at the age of 76. She passed away at the age of 96.
Wow.
She went in with £2 million. She came out, well, she didn't come out, but her will had 16,000 in it.
Wow, that's a massive drop off.
Well, yeah, okay. So if you are, and many people do, bless you.
Thank you.
If you end up in a position that you need a care home or nursing home, or even if you need people to come into your home to care for you, the NHS don't pay anything until your net assets are down to 17,000.
Wow. So this is one of the reasons actually I wanted to get into trading.
Okay.
I heard about how much it would cost to look after my parents in their later years if they need that type of care. And I thought it was shocking that the government forced the sale basically of the property in order to pay for
all assets, stock shares, everything.
All assets. And then how much it costs to actually look after them, even in standard care, not let alone good quality care.
Yes. Yeah, well, I've spent time in a few care homes that I personally wouldn't want to get put into.
Yeah.
So, yeah, as a visitor. I mean.
Yeah, so that was what triggered my desire to build wealth.
Yeah. Yeah, and having built it, very quick example, one of my friends in Liechtenstein is a lawyer. He helps families with all this kind of stuff. And he very efficiently helped an American couple, mum and dad, who owned a furniture business to sell it and then pass those assets down to their children. And these two children inherited $106 million very efficiently. 1 year later, they got $6 million left. And they'd had advisors that appeared from nowhere and said, oh, you should buy this restaurant, you should buy this. I think they even bought a casino.
Wow.
It's like, what are you doing? And so they've gone from 106 to 6. Now, their parents must be just rotating like washing machines in the grave. Yeah. So in my view, our job as wealth educators, let's call it that, which broadly we both are, is to help create wealth and then protect it. Mm-hmm. And part of that protection is the efficient transfer to the next generation, in most cases, because I appreciate not everyone's got kids. But
they are different skill sets.
Yes.
The creating of wealth is one skill set. The protecting of it is another.
Absolutely.
And then passing it on effectively and efficiently is definitely another one as well.
Yeah, but possibly most people would know, many people would know that my background is property. Mm-hmm. So all of my money originally came from property, but I'm now doing all kinds of things, including, this might be interesting, trading by proxy.
Yeah.
Yeah, so we can maybe talk about that.
Yeah.
But my objective as part of wealth creation and wealth protection is to have a fully diversified portfolio.
Yeah.
By which I mean, yes, property, of course, because it's the core. It's the only asset you can borrow against to any significant degree. Going to Barclays, getting 90% mortgage if you're going to go and live, whatever. It's really the only asset class that gives you a reliable income stream. I know trading does, but it's not necessarily like that, is it?
No.
It might be a bit more like that.
Yeah.
So, yeah, I love property, but having got to pick your own figure, 1 million, 2 million, 3 million, or whatever, and it's really not that hard with property. If you've got 5 properties, you're probably a millionaire. Mm-hmm. If you've got 10, you're a multi-millionaire.
Unless you started investing like I did in Middlesbrough and realised that may have not been the best decision.
Oh, okay.
5 properties, you could still be under $500,000.
Okay. Well, yeah, okay. But I mean, this building we're sat in is one of my buildings. I bought it without paying a deposit, a bit like an option. Oh, well, it was an option.
Yeah.
So there's a high degree of read over between trading and property when you get to the more advanced level.
Yeah.
So this building is currently unencumbered and it's worth $1.5 million. So this one building, if you're in commercial property, you could be a millionaire already.
Yeah.
So having achieved that, in my case through property, and good luck to you, however you did it. What do you then do with the money? And when I talk about trading to other people, not to you, most people, when I talk about trading, imagine I'm talking about the stock market and just the stock market. And they really focus on this kind of idea of being a day trader.
Yeah, they do.
Who buys and sells shares.
Yeah.
And I think it's Warren Buffett that said 90% of day traders are bust within 90 days.
Yeah.
Because they just...
Yeah, it's so intense for them.
Yeah. And they don't typically have any rules. They go in off
strategy.
hunches.
Yeah.
Yeah. So, and I know people that their strategy is to just go and buy NVIDIA shares.
Yeah.
And that's it.
Yeah.
And I just did a little mental calculation. That if you paid £500,000 for some NVIDIA shares, do you know how much dividend you would have earned in the last 12 months?
No.
So £500,000 in, the actual dividend return for your princely £500,000 of NVIDIA shares will be £185.
What?
Not per day or per week.
Total.
In a year.
Which is nothing.
Yeah.
For £500,000.
Yeah.
Flipping it.
And the reason I put that into my little head is shortly, in the next few months, we're buying £2 million worth of property in Birmingham, 6 flats. Buying 6, so we don't have to pay the extra stamp duty, it's commercial stamp duty, blah, 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 whatever, it doesn't really matter. But the point is, if you landed from Mars and had a one-day education on wealth, and you had £500,000, to go and put it in NVIDIA shares for £185, or to own 6 flats in Birmingham.
Yeah.
The 6 flats in Birmingham's getting my vote.
Yeah, yeah.
But then you've got this concentration risk. And like I started to say, whatever point you're at, whether it's 1 million, 2 million, 3 million, whatever it is, where do you start to put your money so that you diversify and have multiple income streams? Because again, Mr. Buffett says, average millionaire's got 7 streams of income.
Yeah.
And so if you're all concentrated in UK property and you've got Rachel Reeves and Keir Starmer, you might not feel very safe. So where else are we going?
Yeah.
Which is one of the reasons that I was so interested in STARTrading, because you're not teaching day trading, are you?
No, I mean, we can, but that's not where we start people.
No.
Because
and you're looking for particular patterns.
Yeah.
Particular trades.
Exactly. Yeah. And even if we are, what we teach them is swing trading, which is a higher time frame to day trading, which makes it less intense. But those same structures and systems, once you've mastered it at that level, you can day trade with and become very, very successful that way as well.
Well, yeah, because the obvious consequence of what Warren Buffett said, 90% of day traders go bust within 90 days, is that 10% don't.
Yeah.
So if you're one of the 10%, fill your boots.
Yeah.
But for me, I love everything. I've done the STARTrading courses, and like many things in my life, I want to do it. But that means for me, I want it to happen, but I don't want to do it.
Yeah.
So I've funded the account of one of the people in STARTrading, and I'd far rather do it that way than actually. So I did the theory, understood the theory, did the courses.
Yeah.
Worked with Josh as the mentor. So yeah, it was fantastic.
Yeah.
And I do think that's education in a general sense. I'm a education junkie. And if I look at the history of things and apply some of the principles that you teach, that's one of the reasons that I was able to synthesize the various pieces of information that are hitting me. And I want to give a particular example, if it's okay, of a trade that I did in September. This is a bigger trade, and it was with silver. And the result has absolutely shocked me, because if you think about a normal person, and I don't mean that in any disrespectful way, a normal person that's working hard, doing their job, by the time they're 65 or 70, they probably own, the average person, 70% of people in the UK own houses, not rent.
Yeah.
So typically someone would have paid their mortgage off, and the magic age is actually 56. That is the average age at which a Brit pays off their mortgage. Very, very similar in the States and France and Germany. So it's mid-50s. And they've worked their entire life to get to that point.
Yeah.
What residual wealth have they got after living expenses and tax? Well, generally their house.
Yeah.
And a pension. So the average Brit, 50, 60 years old, has got the home they live in. So let's call it a £250,000 house. 250, 300,000, something like that, and a pension. The average Brit's pension by the time they hit retirement age is £105,000,
Okay.
with which they then go and buy an annuity or do whatever they do in retirement. So if you took their total wealth, it's somewhere between 350 and 400,000 pounds after all living expenses.
Mm-hmm.
So hold on to that figure in your head: 350,400,000. I became convinced in September that silver was about to break out, and so I invested initial £500,000, and at the time silver was roughly £1,000 a kilo. That was going well. So in October, this is this year, so as we record this, I'm talking 6, 8, 10 weeks ago or something, I invested another £500,000. So my total in was £1 million, for which I was the proud owner of 880 something kilos of silver. As we sit here today, that same silver is worth roughly 1.4 million.
Wow.
The reason that humbles me is using the skills that I've acquired along the way, be it property, assets, trading. I was able to place a trade. I haven't exited it yet, and silver's up another, again, as I mean, I can't tell you what it's going to be by the time you watch this, but today it's up another 3%.
Mm-hmm.
So that £1 million in is now worth 1.4 million.
Yeah.
And the way I structured it is tax-free, which is, I know what you do as well.
Yeah.
So I've just made, in 10 weeks, the same amount of money that most Brits or Americans would have as residual wealth in their entire life. And I've done it in 10 weeks.
Yeah.
Now, that to me it's just genuinely humbling.
Mm-hmm.
And if I can be some part of helping other people to do that same thing,
yeah,
I'd love it.
Yeah.
Absolutely.
Which is why we do what we do.
Exactly why we do what we do.
So going back to kind of predictions for a moment, and you are originally a property guy,
yeah.
And a lot of the people who are with us today are either interested in property or are investing in property. Yeah. What are some of the kind of themes or patterns or predictions you've got for 2026
for property?
For property.
Yeah. Okay. So if I give you kind of two answers, and if we focus on the UK and then the rest of the world, maybe.
Yeah, that'd be really good.
Okay. So the Labour government came to power roughly 18 months ago, and without going into detail, and I'm not mudslinging here, but it's just a fact that two of the most senior 3 Labour politicians have got into quite a lot of trouble with housing.
Yeah.
And that's with the existing rules.
Yeah.
The reason I'm saying that, and I'll come back to it in a second. So Angela Rayner lost her job as Deputy Prime Minister and Housing Minister, because she failed to pay the correct amount of stamp duty. And you'd have thought someone in that position would have had appropriate advice.
Yeah.
You would have thought.
You'd have hoped.
Well, yeah. Interpret as you will, but just fact, she's gone.
Yeah.
For now. She may be back. And then, of course, Rachel Reeves didn't do the same thing. She did a separate thing. So, as I'm sure everybody knows, if you're the Chancellor of the Exchequer, you get number 11 Downing Street, next door to the Prime Minister, which means you don't need your family home. She's got a grace and favour house in the country as well. So she decides, quite reasonably, I'm going to rent out my family home where I was living before I got given these 2 rather nice houses rent-free.
Yeah. And
she was told by 2 separate estate agents that she needed a licence in writing.
Yeah.
She then denied she knew anything about that, got caught, and somehow she's still in her job.
Yeah.
But I would say, if it's possible, that diminished her reputation. I'll say that advisedly because I'm not really sure it's possible to diminish it any further when it's already on the floor. So the big piece of news for the UK property market next year is something called the Renters' Rights Act.
Mm-hmm.
Some people refer to it as the Rent Reform Act, which was the old Tory name for it. So Labour changed it and enacted it largely as the Tories were going to, a few tweaks. So it's now called the Renters' Rights Act 2025, which refers to when it was passed. It comes into force on the 1st of May 2026. And essentially it gives lifetime tenancies. So you're a landlord, I'm a landlord, I move into one of your houses, for example. From day one, I have the right as a renter to tell you I'm leaving in 8 weeks. You do not have the right to remove me for any reason other than a very, very short list, which include things like you're going to sell it, you're going to move into it yourself, or your mum's moving into it, or something like that.
Yeah.
And you actually have to do those things. So if you booted me out and said, "Sorry, see you later, Paul," you will not be allowed to rent that property for 1 year after
Wow.
moving me out. You will actually have to put it on the market if you told me that. As soon as I move in, I've got 6 months to challenge the rent. So I agree to the rent, I sign a rent contract, but for the first 6 months, I can take you to a rent tribunal and say that, well, I don't know what I was thinking, whatever.
Wow.
You are only allowed to put the rent up once a year, special form, so what? Well, the so what is that every time you try and put the rent up on me, you have to give a reason in writing. Yeah. And if I don't like it, or if I think it's too much, I can take you to a rent tribunal, which is free for me as a renter. It's not for you. You're going to need professional representation. And until that tribunal happens, which no one knows, it could be a month, it could be 2 months, it could be 6 months, the rent increase isn't allowed to be put in place.
Wow.
So I could talk, but long story short, government recently surveyed, I call them amateur landlords. So that's people that own properties in their own name. And even without fully understanding what's about to happen to them, 50% of them said they want to sell up. There's 2.5 million such landlords in the UK. So even if they've only got one property each, and they, on average, they've got nearly 2, but they keep it 1, that means that in the next 6 months, something like 1.2 million rental properties are probably going to come on the market. And even though there's a property shortage in the UK, if you flood the market with 1 million plus properties, the price is going to go down.
Yeah.
Conversely, Blackstone, which is the biggest property asset manager in the world, American firm, 660 billion of property under management, just bought 17,000 houses in the UK. So you've got this dynamic where the professionals set up properly through a limited company with rent guarantees, with all the right insurance, that know what they're doing, which is like your typical Touchstone student, are buying. And the amateurs that just accidentally became a landlord, inherited a property, 2 people get together, they got a house each, oh, well, we'll live in this one, we'll rent that one. This is typically how people become landlords. They're panicking. Yeah. And they don't even understand yet. So combine that with the other dynamic in the background is that Labour said they're going to build 1.5 million houses. No chance. None. Because we're 1.5 years in, and the Tories were building circa 200,000, well, not the Tories, but the country under the Tories' leadership were building 200,000. It's now gone down to 150,000 under Labour. And Savills just published quite a major report that said if the UK is lucky, there'll be 750,000 houses built.
Wow.
So there's a short-term supply shock, oversupply, 6 months. Long-term, over the next 3, 4, 5 years, property prices, by the time the Labour government is, well, I don't know, elected, re-elected, gone. Everybody weeping as they leave. Maybe not. Cheers of joy. Saville think that property prices are going up by 25% in the UK. And I think that's too low. So I think property prices are going up over the 3 to 5 year period, but there could be, probably will be, a dip for the first 6 months of next year because of the Renters' Rights Act. Then that, for me, is the time, if you're a crypto trader, you want to buy the dip. So if houses were Bitcoin, what I'm saying is for the next 6 months, buy the dip.
Yeah.
And you're going to see that January, February onwards.
Yeah. Amazing. Really, really good insights. Really good insights. Okay, so that's one prediction for what's going to happen in property. We've talked a little bit about future proofing because of what can happen in the future. What's kind of some of your other major predictions? And obviously people can join one of your webinars to hear all of them. We'll send out a resource of your predictions as well. But what's kind of one, if you would, this is a good question, if you were to pick one of your predictions that you think people really need to pay attention to, what would be the one prediction that is like the most impactful for people to become aware of?
Okay, that's a great question. My general thesis is that fiat money issued by governments, is becoming less and less valuable. I don't know if everybody out there picked it up, as well as cutting the US interest rate at the Fed, the Federal Reserve, at the beginning of December. As well as doing that, they also turned the money printer back on. So they're not calling it quantitative easing, but it is quantitative easing. They've got some other fancy name for it, which Don't worry about what they're calling it, but basically the money printer's back on. So having been tightening and tightening and tightening global liquidity is now going the other way.
Yeah.
The number one asset class that all central banks, without exception, around the world are buying is gold. So if you don't do anything else, and if you've got some spare money, and it is important to you, so it's not like, it's spare money that I don't need to feed myself next week, and I can afford to put it on the 315 at Chepstow or something.
Yeah.
I don't mean that kind of spare money. I mean money that you don't need today, but you want it in the future, so you want it to grow in the future. My number one recommendation will be to get very familiar with gold. And in many jurisdictions around the world, you can buy and sell gold without paying tax. So in the UK, for instance, you can do that if you buy sovereigns, gold sovereigns issued by the Royal Mint. So there's no VAT, there's no capital gains,
Yeah.
blah, blah, blah. And if you can invest in gold, then I would.
Yeah.
In fact, never mind, I would. I do.
Yeah. So we've done silver.
Yes.
We've done gold.
Yeah.
Brilliant. I think they're definitely a top one to have there. And I do invest in all of those things as well.
Just be careful with silver. It's called the devil's metal for a particular reason. Its volatility is 10x gold.
Really?
Yeah.
Ah.
So, and the silver market globally is less than 10% of the gold market.
Yeah.
So, yeah, it's good at the moment, but it can rapidly turn from very good to very bad.
And again, I think it's a really good point to make. But if you are thinking longer term, you can't really lose when it comes to gold and silver.
Okay, so gold, no. If you look, for instance, the last 15 years at gold in either dollars or pounds, you've got double-digit returns year on year. Yeah, you've maybe got a year where it goes backwards 2% or something.
Yeah.
But if you held it for 15 years, history shows us it's a double-digit, 10% plus compound growth. And last 12 months for gold in dollars or pounds has just been insane. It's more than 50%.
Yeah.
And in fact, in the last 2 years, it's more than double. Silver, on the other hand, it's just a different thing. Silver is now at an all-time high. The previous all-time high was, can't remember if it was 2013 or 2014, but it went up like a rocket and it then halved and it stayed halved for more than a decade. Gold has never done that. Silver has.
Yeah.
So
when we're thinking long term with silver, we're thinking longer term
very
when
long
we're thinking
term.
with gold.
And also think, if it's a fairground ride, with silver, you're on a roller coaster, you're like, way, whoa.
Yeah.
If gold is more like you're on one of those carousels with the horse that goes up and down.
Yeah.
It's a lot less scary and you're a lot less likely to kill yourself.
Yeah.
So even if you fell off, get a few bruises, but
yeah,
that's an analogy I haven't used before. I'm not sure it's right, but
yeah.
Silver is definitely scary.
Yeah. I love it all. One of my favorite things to do is to trade the markets tax-free, gold or silver market, make profits specifically on those two markets.
Yeah.
And I kind of have an internal mechanism that when I make money specifically on those two markets, I go and buy them as a physical asset.
Yeah.
I just quite like that.
Yeah.
So I trade it electronically.
Yeah.
And then I go and buy it physically. That's a great way to go.
Perfect.
Yeah.
Yeah. And then probably the only major asset class we've touched on shares and pretty much everything else. Crypto, bless you.
Sorry.
Crypto is a favorite of mine, but not crypto generally, just Bitcoin.
Yeah.
I only invest in Bitcoin. And my internal rule, you were talking about rules, which is what triggered it in my brain, is for every euro, because my main currency is euro.
Yeah. I
invest in Bitcoin. I counterbalance that with a euro in gold. So my gold and Bitcoin are mirrored.
Brilliant.
And that's, it serves me.
Yeah. So final point.
Yes.
Just so people are aware, because I'm not sure we mentioned at the start, what's your accuracy on your predictions over the past few years?
In excess of 95%.
Well, I think they're definitely worth listening to then.
Well, the other thing that might be interesting to people is, if I look at the last 2 years in particular, I was doing all right up until 2 years ago. So over my entire life until the age of 59, so 2 years ago, I've taken, not mine, but mine and Aniko, my wife's net worth, to just over 50 million. By following my own advice in the last 2 years, we've doubled it. So it's now over 100 million. And I'm not saying that to piss anybody off. It's just, I take my own medicine.
Yeah.
I don't tell people do that and then I do that instead.
Yeah.
So what I'm actually sharing is what I'm doing.
Yeah.
So I might be right, I might be wrong, but I do believe it because that's where I put my money.
Yeah. Brilliant. Fantastic. Well, thank you for joining us, Paul.
Thank you, Lewis, as always.
And make sure you click the link. We'll send out the information about Paul's predictions and where you can join him for his next webinar, where he goes into more detail on all of these and how it's going to impact you.
Yeah, thank you. And when we've both made a lot more money, we'll put more money in the meter so the lights don't go off.
Yes, we'll do that. Yeah, it's a good idea. Thank you, Paul.
Thank you, Lewis. Brilliant. Have a great 2026.